Welcome to the Delaware Mortgage Rate Weekly Mortgage Market Update for the week of July 15th, 2013. Hello, I'm John Thomas with Primary Residential Mortgage, here to give you your update. Well, last week was a good week for Delaware mortgage rates. We did recommend floating to start the week because we thought there was going to be a rebound after the big sell-off on July 5th when the jobs report came out. And if you look at the bond chart on the screen, we were right. You can see the big red candle. That was Friday's jobs report. Big sell-off in the bond market. We thought it was oversold. As you can see on Monday, green candle up. Mortgage bonds did rally to start the week, and then they did rally, continuing that trend the rest of the week, as you can see with the arrow up. So the short-term trend for mortgage rates is down because the bond short-term trend is up. So we are going to recommend cautiously floating your Delaware mortgage rate to start the week to see if we can build on this momentum. Bond market move higher, interest rates move lower. Now, last week on Wednesday, we did see a release of the Federal Open Market Committee meeting minutes, which showed that half the members of the Federal Reserve want to stop the bond buying program or start tapering the bond buying program now. The other half want to wait until the economy improves. After that release, Ben Bernanke did go on to sue the markets by stating that the easy money policy the Feds have will be here for the foreseeable future, basically trying to keep the market stable, help keep interest rates low, to keep the housing recovery going and the labor market recovery going. So that was the Federal Open Reserve meeting. That was on Wednesday. The bond market was nervous, started to sell off, but then after Bernanke's speech, it came back, and then we closed higher than we started the week. That was great for Delaware mortgage rates. What we saw in economic news last week, unemployment for May 2013 per state was released. You can see the graph on the screen. Delaware came in at 7.2%. Now, this came after the jobs report for June 13. The jobs report was last Friday, July 5th. Looked like it was good. That's why it tanked the market. But when we dig into that report, it wasn't that great after all. Most of the jobs created were low-paying jobs and or part-time help. And if we look at the next generation of American workers, that's people aged 18 to 29, the unemployment rate for that age group is 16.1%. So that's huge. That is not good news for the labor market. So that is information that should help the Fed not taper the bond buying program, which could help mortgage rates stay stable and maybe even move lower through the end of the summer. So that's why we are recommending floating. Now, the long-term outlook for rates, everyone keeps asking me where rates going. If you look at the bond chart on the screen, that big blue line going down, that's the trend line. It is long-term outlook for mortgage rates is to move lower. But what we're hoping is the mortgage rates can close above that blue line. If they can break above that blue line that you see on the screen, that is good news. That could be a summer rally. So that's why we're cautiously floating long term. We're hoping the mortgage bond can move higher, break above that blue falling trend line, and basically set a new trend going upward for the long term. And that would be great news. That'd be a summer rally. We could see interest rates move lower, maybe even into the low fours. So that's what we're looking for. We'll keep you updated on that. In the local news, the next free first-time homebuyer seminar is in Newark. That's July 20th. That's a Saturday. That's at the Christiana Hilton Hotel. That's from 10 a.m. to noon. Then the next one in Dover is Saturday, July 27th. That's from 10 a.m. to noon as well. And that's at the Dover Sheraton Hotel on Route 13. You can register for either one of those events by giving us a call in the office, 302-703-0727. Or you can register online, www.delawarehomebuyerSeminar.com. Look forward to seeing you guys next week.